Hey guys, hello. I'm not using voice now because I was coughing too much yesterday, and it hasn't improved. Why hasn't improved today? That is kind of annoying here. Um, I am not looking to the upside today. We have a gap. The gap has not been closed. It has. This, I failed to take a short here. There was a really nice location here. Market closing this gap was my stop. I rather took a long here using this low, which the market is going through right now as a stop. I'm not long now. I'm flat. But looking to the downside, more likely aiming to see to sell any rallies here. Now the current low is at it's three wide low here. This is a weak low. It has exit, but this is relative to today, right? But if I open this, you see this thing, and of course there's another three low down here. Now, what do I do here? We see now the market is at this level that was a really solid breakout when it happened, but it happened in the constant in this contract that is expiring in just a couple of days. That the rollover is in full now. We have this one now, which is March, and this one really had volume just Friday here. You have Friday here with volume, so there is some inventory, some long inventory in this market. If I talk just about the ES, right? But remember, the ES is an index. And we may see something here. Maybe Nasdaq can be aiming towards the low. It has a directional move now. I was watching Nasdaq here. It's just holding really nice there. We have Russell breaking out the previous day range. Dow is in a downside trend. There's divergences here, right? But it has been so hard to trade. The reason for my long is when I started to see some tempo picking up when the market was down here, right? It came up to here and then come down here, and I went long somewhere in here. It didn't develop much. Really, it didn't. Rather, was an opportunity to sell, an opportunity that I didn't take. Now, when these two contracts are on side here, I have this one that's pretty close to this low, right? This has good volume here. Very close, right? It's drying. There's no volume here. If this is short-term trading, it needs volume to fit, right? It doesn't have right now. It has chewed through all of it. It doesn't have much here. It doesn't have much here. It doesn't have much here. This is an absolute weakness to the upside, but who cares? It's momentum trading. Momentum traders just look to what the market is doing right now and nothing else. I'm trying to put some context in this. It's because the market, this market, shouldn't have any kind of inconvenience to going through this here, right? Because there is absolutely nothing here. It's empty. A little bit of volume can go through this area, through this low, really easy, really, you know, fine. And we have, remember, we have FOMC tomorrow. We have FOMC tomorrow. I wonder who wants to face that number, short or long, right? Now this has been corrected. Uh, this was a reference that I have here as my stop. That one's gone too. That was just personal. This seller and last are from this day. No, it had really nice, good tempo around this area, and it dry, right? It just dry. There was volume. Notice how volume just dries here. No. Oh, is that? Oh, and by the way, the reason why I took my long here is when I saw that change in tempo to the upside, considering considering settle. I mean, inventory being 100% short, overnight inventory being 100% short here, and picking up in tempo and volume. Right, we have really high volume here. But the first thing that need to happen, right? First thing, the trade actually was aimed just to close the gap. It didn't happen. I guess I can consider myself lucky here because that one, look at how these calls are now, right? And also another something that is in the wave, at least for me personally, for my trade is, I don't have the availability of these options of H5. I'm trading December here. This will follow. This will follow March, but I am looking at this chart. Right? I'm looking at this chart. I have this just to see or to know where these references are. As long as this contract is alive, I will use these references here. For example, right now, this is a go no go level here. I have here, and the market has went through that. All right. I don't see the volume here. This is pretty much inexistent now. Now, the potential destination now could be maybe this low here, or maybe even, oh, by the way, hello, 6100 here. Okay, where this 6100 is? That's about 10 hundredths from this low. Oh. Right, this 6100. Oh my god, I forgot about this. I just remember this single tick distribution here. Oh boy. Ah ha ha. Man. Gosh. I got you. I got you now. This nuance here. What time is it? 10 more minutes here. Fuck it. I'm gonna take this one. Oh, I need Nasdaq, man, to join the movement. Notice how this is drying, okay? This is drying here. There can be some buying here. Uh-oh. Also, I have here my support resistance. Gosh. Oh boy. Oh boy, this is not good. I guess I make a mistake here. Alright, what do I do here? I'm going to wait. I don't want this trade to go below or above A low. Okay. But I need it to go through this. Do this 14K here. The Dow was doing a comeback. This is no good, man. It just stopped right here. Okay, what's this area? That will be this one, okay? This area here. That's how I move these areas of support from this chart to this one. Notice that this is adding some weakness to this low, but it's still far here in the downside from this low here. This is more like sell the rallies rather than sell the breakouts, right? Day. I could use a nice, what about, let's check how much at least 60, 65. Why this 60, 65? Because that is closing these distributions here. Let's have a really nice low here. We may have something in the opposite direction here. Some volume is coming. right now, Smack is attempting here. Smack is attempting to take this. This is a key level here. This is a key low here. Really, there can be some really quick upside movement if there is not a breakout through this 60, 43, 42, or through this low or towards this low here. Look at that. Look at how those just dry, man. Come on. No, this is not. I am not good here. I need to leave here. I need to leave here. I just need to leave here. Can you see how this pushing it to the downside? It's just not having it. Because my location is terrible here. Now, 2 more minutes for next period. Notice how there is a tremendous push here, but it's just not having it, man. It's going right there. Look at that, man. What the heck? Nah, I don't like this. I am wrong here. I shouldn't have bought here, but this is a sell the rallies situation here. No, it's just not good. No, I am looking to the downside. I'm looking to the downside. But my entries have not been good. And also notice how this is how this really nice taper here, right? Really nice. There can be some nice spike here, like boom, happening really fast. But the fact that Nasdaq was okay. I have just saw this cut there. Okay, I may re-enter this one, but set 44, 630. That's 10 points. But let's see. now, if this distribution, this little one is close here, that will be an out for any kind of shorts here. That will be an out for shorts if this one closes. Look at that. Look at that. I guess what I'm trying to do here is looking for a trade, right? And that's not good. That's not good. When you find a trade, I mean, if I look for a trade, I will find a trade, and it shouldn't be like that. I just noticed that, right? And that's I am being a danger for myself here. At the end, after all this time, you come to the realization here that you need to step. I was talking to Sam yesterday. You just have to keep, or we have to keep, or stop beating ourselves. It's just, the market we trade is ourselves. And that's a quote from Jim Dalton. With time, you will find, right, that all the answers that you were looking for were always there, inside you. They were not here in the market, they were not in charts. They were always inside you. Oh, by the way, look at this. Look at this. I was checking this area as potential, if there's any shorts here, taking A will close, right? And just remember now that A is that go no go level. Most traders have forgotten those levels now. Because the market is way up here. What do you mean there's the weekly low, right? Why I say this is a weekly low? This is the weekly low. I have my weekly charts here, and weekly low is way down here. That's 100 points below. Why you say that, or why I say that? Actually, that's a good question because let me check. There's something. Oh, okay. That's not the previous week low, but let me take those possible because one Friday. Can you see you have Friday? 1, 2, 3, 4, 5. This is a low. But 1, 2, 3, 4, 5. Okay, this is the low of this one. I got this low here. Am I wrong? This is 12.3. Yes, this week low. But that is not being reflected here. I mean, this rollover thing has cows, and this overlapping of gaps and data just mess up these charts. I'm stepping out. of the market. I miss my entry here. When the market try to close the gap. Gosh, man, that Nasdaq is there's something here, man. Look at that. Look at this short term. Oh, yeah. Let me detach these charts. This is what I'm watching here in Nasdaq. I have multiple lows here. All of this, you know, and this is something that I always watch or I was carried. Look at this. Look at this, for example, right? Look at this. Look at this buying that happened yesterday, right? All of that is gone now. All of this, look at this, what it is now. Let's maximize this one, okay? Look at that. Can you see this? Okay, I can put a trend line really nice here. Look at that. I got the standard to the left. Doesn't matter, doesn't matter. Remove that, and all this has been taken care of. And these loans I wasn't checking here, but these loans are different from the ones here. In the ES, comparing times, that was a time when the laggards started to show up in yesterday. Laggards started to show up. Let me open this thing here, right? Where? Here. I don't know. No, here. Yeah. Kind of like around the same time. Not exactly, but you know, you got the idea, right? And the liquidation that happened at the close in Nasdaq, I mean in the ES, that was something nice too. The nature of the traders, you know, the mindset of traders now they are just thinking following price, right? We have a big break yesterday. We have a big break yesterday at the close. Of course, the market is going to keep breaking. You know, the only trade I can do is a short, so I'm going to be selling. And I am still using these highlighted areas here, the 96 and the 40, 6096, 6940 in the ES, you know, in the old contract as references of for support resistance, you know, like a high and low range, because there, I believe, this showed me there is somebody really big here. It doesn't mean that they are still here. It doesn't mean that transaction that happened, whatever happened here, is not somebody entering or closing. I don't know, right? I have no idea what that is. Right? It could have been somebody closing a position. It could have been somebody hedging. It could have been anything. I have no idea. This just gives me some ranges to work, and I see the market, what the market does around those areas. Right now, for example, it's being used. It's being used as a support. Right? You have a really weak low here. Really, really weak low. So both sides, the long and the shorts are really bad. And it's known characteristic of thin markets, also typical action, short-term traders that got the market too long just after getting it too short. And there's a constantly back and forth, back and forth. Trading these kind of markets can be really dangerous. Now, the next thing that I'm observing here right now is tempo. It has changed dramatically, dramatically from what we had during A. It has high volume though. Really high volume, and I'm surprised with that. I'm really surprised with the volume this market is having relative to yesterday. After having this kind of spike, after having this kind, not kind of spike, this kind of increase, right? It was like 20% higher yesterday. Now there's a trend. It's higher than yesterday. So there is more here than just short-term trading. Check this Nasdaq. Look at this, man. But Nasdaq is holding, right? Nasdaq is an inside day, lots chop. Russell has got out the range. ES open with a gap, and the Dow open with a bigger gap. I am flat. No, I don't. No, I told you. No, trading journal here. Again, my goal. Okay. I'm going to keep doing this. I'm going to keep writing. 17th, yeah. Until it becomes part of me. Today I miss it, man. Frustration or confidence? Frustration. 12, 6, 12, 17. This is a thermometer. Yeah, frustration thermometer. Not. I am not achieving my daily goal. And my daily goal is not a financial daily goal, right? You have seen the goal that I have there. See an opportunity, take an opportunity when I see it, right? When I perceive there is an opportunity out there, just jump into and take it. Overconfidence thermometer. Yes, what is called neutral here. I'm fine. I am fine. Not feeling overconfident. I feel lucky that I am not red. I'm flat. I'm break even. I got too late into my trades. First I got too early, and then I got too late. Alright? Frustration, overconfidence, dirty goals, zoom in, zoom out. What's going on here, right? What's going on in the market? That's why I call zoom in, zoom out. Let's save this. So, nope, cancel. And this is my journal. This is my trading journal. What I'm doing now. I'm trying to record what I feel. Record my feelings. Zoom in, zoom out. Market. Open it. Market fail. Fail it to close. Gap with high volume. Tempo dry, right? Tempo dry, the close. It was getting to the previous day low. Now we are at this go, no go. The rollover, okay, the rollover, this you can zoom in out. The rollover period is in full display. It's in full display. It's at its peak now. Very dangerous situation. Very dangerous situation for any kind of trading. Because of the swings that can happen here. There can be some, why I say swings, because there can be some billion actions closing one positions in one contract or positioning in the other and stuff like that. There is just too many things. Just too many things here. Just too many things to be aware of, and that can happen. What can happen is the things that can happen. I don't know, man. It's just too much things that anything can happen, and I may have no idea. I have no idea what is happening. And the fact that I am acknowledging that the things that I don't know are really overwhelming here. That is risk, right? That's a risk. This is high. This is hiding risk. This is hidden risk, right? The risk that is behind here, or it's just high for me, right? Now perceived real threats is, this is what I do when I am into trade. Okay? I, for example, had this long, I was long, only one call here. And I need to close this gap. And boss, I was thinking, no man, this market can come down here, right? That was perceived risk. The market moving against my position. What was the real risk? Right? The real risk was not closing the gap. Okay, because the market has volume, the market has tempo, but it was, if tempo decreases, right, that's conditional, it wasn't decreasing at the time. If, right, that can be a real threat, but it wasn't, right? When I got long put down here, and this is why I say, I got too late, right? And I thought I did wrong. The market went through previous week low. And not previously. I guess I'm not going to call this. I'm going to change this. I'm not going to, because this can be misleading. It's not previous week low. It's a reference, in the weekly time frame the market has used before, that has been watching last week. That is that reference, this one here. It went very close to what was sitting actually right there at what I have marked as support resistance. So my real risk is that is working as a support. It's like getting long or short at the center of the range. That's terrible location right there. For example, right now, I'm going to go long and short right at POC. What are the odds here? What are my odds here? Not too much good odds here, right? So the risk is high. Whatever trade I take, if I take a long, the risk is high. If I take a short, the risk is high. I am not going to risk 1 point or 2 points. I'm not measuring my risk on those terms. My risk is 2 points. If the market doesn't move, if the market moves against me 2 points, I'm out. That's not how I measure risk. And I consider that being a risky way to measure risk. If it works for you, great. Because, that's the thing, right? Find out something that works and just keep repeating over and over. I'm going to make myself breakfast. I'll come back, man, Jim. I'll come back. But so if you have any questions or comments, please just let me know. More than glad to. More than glad to talk about markets. Markets are I really like this business. Do you know what I like from this business? Probably what other people hates is that there's not 2 days that are the same. Right? I have that personality that when I feel, when I stay too much, when I do something that is, how can I say this? when I stay too much in one place, I do remodeling. Right? When I stay too much in a place, it just gets. To, I start to feel. I don't like it now. I just don't like it because I know exactly what I need to do. Right? I know exactly what I need to do in my jobs. I am doing ceilings now. That's my business now. And before I go to any job that I have, I know exactly to the T what I need to do. I consider myself a good ceiling contractor, and and this is what people successful people call success, right? You do one thing over and over until you become good at that, and you just repeat the things over and over until it becomes bored. You are bored doing the same thing over and over. All right? Trading, there is a lot of similarities with trading. What what is repeated in trading is not the patterns, right? Buy here, sell here. When the market does do this, do you have to do that. When it's reaching VWAP or supporting 200 Bollinger Bands or whatever, it's not that, right? That's not that never repeats. I mean, it doesn't work. I believe it doesn't work like that. What repeats here over and over is the behavior of the people or behavior of the participants of the market. It happens over and over. Markets getting too short all the time. Market getting too long all the time. You know, short-term traders of retail or very short time frame traders joining momentum when the market is selling as crazy, yeah, they start to sell like crazy. Right? When the market is, shooting to the moon, they start to buying like crazy. Those behaviors repeated over and over and over. It's just unbelievable, right? And that's why when I don't know if you are there, Sam, but you were asking me yesterday that I should do you should do this or you should do that, or you start asking questions, very valid questions, right? Like why I sell, why I trade too much, right? Why I turn a day that is green into a red one. Huh? But the approach is what you need to change there. Because you are asking the wrong person. I don't know why. I don't know why you do that. The only person who knows that is yourself. But it happens, right? It happens so mechanically, so it is so automatic, and you don't realize why it's happening. If you don't realize why it's happening, the first thing you need to do is realize also. Bring the invisible in front of you. And that's the subconscious. You're doing something there that you are programmed to do under certain circumstances. And that programming is deep in your brain and are starting to be programmed since you were born. Now you are into trading. Probably you got into this business at an adult age, when your brain was fully developed, when all the connections, all the wiring was already there. And now you're using that network for this business. And it just doesn't work. It's not. There's few people that have, I don't know, the right wiring, looking everything, right? Because this is mental. This is a mental game. This is a mental job, a mental business. It requires a lot of training, mental training, rewiring here. One of the things that I did, for example, and it took me a long time. I just I told you more than 2 years took me this. At least 2 years. And it was forget. I had to forget all the crap that happened here. Look at this chart, for example. This is health. Look at what he has here. He doesn't have anything here. That's a nice, neat, beautiful chart here. Right? You just have bars here. Why the bar open? You know what? Who cares when it open? The only thing that matters here is the amount of contracts that are here. What the market did. What the market is doing here is ranging, breakout range, failure, form another range, breakout range, comes back, forms another range, get into this range. Are you getting back inside? Getting back inside this range targets this side, failing targets this one. What the market is doing, that's what matters. What is the VWAP here? Or what is the Bollinger Bands? Or what is the moving average or whatever, right? There's nothing here. And you may say, I may say at the beginning of my journey, oh boy, I need this indicator, or I need that indicator, I need this, and I need that. This is a nice, good looking chart here. And there's nothing here that gets in the way. And you can go even further here. I mean, this is just personal, right? Everyone is different. As you know, I guess I don't have, because these are bar charts. This is really nice bar charts, right? Because this one has openings and lows. This opening and lows can be distracting, but I got used to that. I don't pay attention to those things. Here, what can generate some bias is this one color, right? Color, your brain, you may not notice if you're not aware of the fact that red can trigger something in you, or green can trigger something in you, and you don't realize that can be risky. But you got to know yourself. And this is a nice chart. There's nothing in there. Look at this. And the reference that you put here is a reference that those are nuances that you put there, you put out there. And is the market, right? The market is the one who is going to give validity to these ones here. Right? I don't know the process, how hell has chosen to put these marks here, right? Because everyone is different. I encourage that all the time. You got to have your own thinking, right? Because if you need your own thinking, your own way to think, so you can polish it. If you don't have, if you just blindly follow somebody else, what are you going to do? What are you going to improve? What are you going to improve? You got nothing there to polish. You have nothing there to adjust because it's not yours. With time, you may end up doing the same thing as the other guy is doing, exactly the same thing, but it's yours now. Right? I do many things. With time, I realize that I am pretty similar to Jim Dalton, right? I know there's people that is not as different. And I know another people that has had him as a mentor as well, but they are all different, and they may have some things and they may have another things, right? But the things that you have is the one that fits your personality. They come from the inside. At the beginning, when you start to do it, you don't know, right? You don't know where to start. You just grab anything, but you need to grab anything. You need to grab something. The fact that you're grabbing something and you start working with that thing will be the beginning of a road, beginning of a journey, right? That will take you, to realize, okay, this is not good. I will take another one, right? Oh, there's something here, right? And you start to polish that. You start to make adjustments. Then you realize, okay, I need something else. And you look for that something else. You do something else. And then you realize the first thing that you disregard before, oh, I can use that thing now. Then you bring it back. That's how it works. It's not easy, though. I guess I may sound like this is easy. This is super hard because you're working with yourself, huh? Not just talking about what you need to do, but you actually need to do the work. That thing is what you need to do. But many people, just come to this business looking for something magic, right? Tell me where to buy, what I need to buy, where I need to sell. And every buy, every sell, every entry is a reasoning. What's going on here? What's going on here? Did you see that movement? What the heck is going on here? So I need to close the gap. Look at the volume down here. Do you see the fake? I am limited here. This movement that happened now seems like it was forced. It feels like force, somebody's just pushing the. All right, let's see if the market can get back inside yesterday's range. Oh, look at that high. A high, right over the POC. I just noticed that. Ooh. Okay, this seems like it's a short squeeze here. Oh, yeah. Okay. Market has closed the gap. This is the kind of tempo I was looking at the opening. It just didn't happen, man. We have like, how much is this? Maybe 10% higher volume than yesterday. And yesterday was 20% higher than the previous day. Now we are at the low of the range. Okay, we are at the low of this range. It hasn't taken this low. This low is getting weaker and weaker. Every time the market comes back here, it weakens this low. Now, it can aim, the aim can be maybe, what time is it? 11, right? This rotation here, right? But it hasn't taken the low. We're back inside range now. Can target the opposite side of that range. You got the inventory there. You got short inventory there. Weak short inventory from there. And look at all the after all this movement, my original code is almost right where it was. Can you see? That's the relevance of location. I don't have anything here, my friends. I was actually looking, or I was thinking to sell rallies here. Now, the next thing, where this rally, where this upside movement can go. Now, we have seen a failing to take the low of the range. You can see all of these and the action. There's a lot of buying, good, nice buying that happened Friday in this country. A really nice volume here. It hasn't taken this low. Now let's see if the gap can be closed, right? But the gap is closed. It's closed here. It's not closed here. And can you see how many things are here? Are in here? The risk is just too much, man. I will make myself breakfast. Come back very soon. Okay, let me know if you have any questions, comments. Hello, I'm back here. I got something to share. It hap- just happened now to realize with me. There was something to yesterday, some behavior happened here. B, when this liquidation, when the market, when A created a really nice volume high here, it was liquidated. This action was the action that followed was a liquidation, and then the market just, you can see what happened, right? But the same action that happened here happened later as well. But this in the bigger time frame. This happened. We have some kind of like a wide, you know, volume up here in A. Okay. The next thing was the intraday, right? We have nice, how many periods? 1, 2, 3, 4, 5 periods here. The volume that we have here in the market did in 5 periods, not the same, but higher, happened here in A. And now, okay, grab that, right? Grab that concept or that thought, right? And leave it. Just put it. Just hold into that. The next thing today, we have this flickering, like a tempo really grabbing pace here below the opening. And I'm making an attempt to close the gap and then just drying, right? Next thing we know happens here. It didn't wait to the end of the day. It didn't wait for the end of the day to do that. It happened like in 4 periods, right? In 3 periods. Boom. Happened here, failed to close the gap. Next thing, remember when market was here, we were talking about how this movement feel like it was forced. It was a really nice setup here, because the market was trading here in this area, and then it just boom come down, and then boom, without notice it was up here. This fake out grab take many shorts, I believe, and then there was just a squeeze. The upside was really strong because the days to the downside. I was looking to sell a rally. I am not looking into that now anymore, because the market has changed. Because there is change in this market. It's not the same. The gap has been closed, and I don't see potential to this upside now, right? But the next thing I am trying to do is, is there any pattern here of what I'm watching, right? Gathering information here. We already have 4 periods, rotational market. What are the odds of that happening? Nasdaq is holding. Nasdaq seems to be the key now, right? Anything here, Nasdaq is holding the key, in my opinion. There's some risk here that's happening in Nasdaq as we speak. The same thing that happened yesterday. Same thing that happened. Okay, I guess I'm going to close. Let me close this. Futures. Okay. So this is closed now. I am disregarding the overnight now. The same thing that happened yesterday. Oh, what's this cross? I don't like this cross. Is this the cross? Yeah. Okay, the same thing that happened here, and even worse, this one here is This was really, 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 right? Like Sabrina Carpenter says, really, really. Huh? This one here. The overnight, the overnight session took care of this laggard part, and this one remains. What happened here is now happening now at the opening. Excuse me, I need to take this call. All right, all right, all right, all right. What was? Oh, I was saying this is Nasdaq, man. You know, well, this is where this low is. This range here, for example, the one that this low here in Nasdaq, what is coming to? It's coming to this. Oh, come on, man. Really? Really? What the heck? Oh. Okay, I guess no. It's basically the opening. No previous day opening that is holding here. That's what we have. We're having a replay of yesterday's. It's weaker. It seems like it is weaker, is it? Yeah, it is weaker than yesterday. It has a more convincing. No, I was going to say it has a more convincing low. No, yesterday, yeah, yesterday had a more convincing low. Not today. No? This one is weakening this one here. Now, we had a liquidation yesterday at the close. Traders are maybe expecting that again. Okay? I won't be surprised if it happened in the opposite direction. Look at Nasdaq. Right? It's challenging. It's see, like it's challenging the previous day high. It's an all-time high. The ES has not made an all-time high. It's very questionable high. Okay. Volume is consistently higher than yesterday. Oh, before I was watching this market, while I was guiding my breakfast, when the market was down here, when the market did this movement, right? Before it did, and the market had volume. The market had volume, but volume is relevant when market has direction. I was thinking to myself, boy, but this market doesn't have any direction. It's a rotating, it's a rotating. The rotation has just started. We have a inside bar to the downside, and this just took previous by a high. And starting rotation early in the session increases the odds of having a rotational day here. Now the next thing I know, the market closes the gap. So that gives us another piece of change, which is it's okay. Now the overnight range is inside. Okay. Putting the previous day high as a potential destination of this movement. May not happen today, but it's a potential destination. And then I see, wait a minute, this gap has not been closed yet. All right? This is such a small piece of information, may look irrelevant, but it actually can have it can be the great significance here. because it has not. If you are just following price, you will prices has this thing that mesmerizes you and gets you into following the market blindly. When you finally get rid of price and start to watch the market by what the market is doing, right? Not just price, but putting the market in context, is like, if I am going to make an analogy, it is like watching the magician perform a trick. Okay, where is the sleight of hand? When it happened? It has happened already. It may happen now. Right? That would be the analogy. Right? When you start to see those things, when you get rid of that influence the price has in our brains. I thought I wasn't following price just because somebody told me. I had to stop watching price or following price, and I say, okay, I won't. Just because I say that, because somebody told me not to do, I thought I wasn't. But boy, I was wrong. It took me, okay, another solid, right, good solid 2 years to finally realize, oh boy, okay, so that's what this was, right? Just when you see it in the rear mirror is when you realize, gosh, I was doing that without even realizing. And that's the danger, okay? That's the danger behind trading, that trading has. We do a lot of things with the subconscious without even realizing we are doing it. We may think, right? We may think that the invisible is out there. We can see it now. I am not under the influence. But just acknowledging that there is something there, it doesn't mean that we are dealing with, or at least we are not dealing it properly. One of the main things in this business is risk management. I think that's the first thing that we need to learn, right? Or to be aware of, or to pay more importance. What matters here in this business is not making money, right? If you are going to be money oriented, change your mind, right? Or put it in different perspective. Don't not, instead of making $100, my goal is I'm not going to lose $100. Okay? To manage risk. If I'm doing that, I'm doing something wrong. Okay, guys, I don't have more to say. I didn't expect to do a stream this long. I thought it was going to be like 10 minutes only. I have 2 trades. I'm basically flat. I'm a break even here. I don't have anything here. My bias now is to the upside, but it's upon, it all depends, right? Notice this thing here. White, okay, a little bit less. The advance of this gap close here is, you have this thing a little bit more and very narrow. Each time it's getting lower and lower advance. It's taking the market more effort to do that. But in the other hand, I have this gap close in the current, in this day. So what it is? It can be one or it can be the other one. So that's my risk here. Nasdaq is still strong. Russell is getting back inside range. The Dow is forming, is giving us potential for a sequential trade. It can already have a good low, but it has a big gap to fill. And also the indices are also outseeing here. There's a divergence here, which increases the odds of rotational, but we have seen here as well. Now the market ending the action early in the session increases also the odds of rotation, but closing the gap, failing to take this range. There's just so many things here, man. So many things to be aware of. Just be careful out there. All right? Okay. I hope you have a wonderful rest of the day. Stay safe. See you tomorrow. Oh, by the way, I may not be here tomorrow. If I do, I may have out now. If I do come back tomorrow, it will be very, very short because I have something to do. But I have something to do, and I rather do it in the morning because I want to see what the market has for us in the afternoon. We have FOMC tomorrow, and the most important thing is we have Chairman Powell press conference tomorrow. There are some odds of there's a rate cut coming tomorrow, but thing has changed since the last time. The bets are changing too. All right. See you. Have a wonderful rest of the day. Bye-bye.